Local auto dealer may be more willing to negotiate as the year comes to the close. A new J.D. Power report expects new vehicle sales to jump almost 7% this month, and that jump may be the result of lower prices. One industry insider predicts high inventories will push automakers to offer even deeper discounts into year-end. Yossi Levi is the founder and CEO of Car Dealership Guy. Yossi, great to have you with us.
Great to be back on. Thank you.
So if I am going to buy a car, you say, wait, prices will come down?
The timing is getting pretty good right now, and the reason is inventory. Inventory has simply ballooned. Right now, we're facing roughly a 3-year high or so since the pandemic. And so with inventories flooding the lot, manufacturers have to move those vehicles, and so incentives are just rising. And so the deals are just getting better. And now that you add potential opportunity for EV tax credit to disappear, that's also bringing some urgency to the consumer.
Which brand has the most inventory on the lots?
Unfortunately, there's several, or maybe fortunately for the consumers, but you're really seeing like some of the culprits are Stellantis, Ford. They're extremely oversupplied relative to demand, and that's obviously hurting them, hurting the dealer, leading to really steep discounts, but ultimately potentially benefiting the consumer. I say potentially because some of these vehicles are still priced at historical, record levels. And so even when you balance it out with rebates or incentives, it's not always a great deal. But in certain cases, it can be.
Yossi, early delinquency rates are now the highest we've seen in 13 years, north of 8%. Serious delinquency rates, the highest in 14 years, almost 3%. How does that factor into this whole equation?
I follow delinquencies pretty closely, and I think where we're seeing some red flags is in the subprime sector, which is still a very small percentage of the overall industry. So I would say it's definitely a yellow flag. I don't know if I would say it's a red flag at this point. If you look at the context of what happened over the last couple of years, consumers purchased vehicles at all-time high prices. There were markups, right? People are underwater, or they owe more on their vehicles today than they're worth at record levels. And so in many cases, consumers can't trade those vehicles in. And 50% of the times when a consumer can't drive their car or they can't afford a repair, that turns into a repossession, which is the next step after a delinquency. And so there is a bit of a concerning picture there. I will tell you, though, that the industry's in a position now where it needs to sell vehicles, and leasing has risen significantly. And so during the pandemic, we didn't see much leasing because manufacturers weren't incentivized to offer great lease programs because people were buying the vehicles, and all-out purchases have better economics. And so now things are just cooling down. We've sort of come back to reality. Leasing is rising. It's about 1 in 4 cars are being leased today. And so overall, payments are declining, and so that's benefiting consumers.